AMD, Advanced Micro Devices, is a well-known tech company famous for making fast chips and processors. Their products are everywhere, from computers and data center servers to gaming consoles like PlayStation and Xbox. The most familiar names are probably Ryzen processors for PCs and EPYC chips for large-scale servers. AMD also produces Radeon graphics cards, which are popular among gamers and content creators. In terms of product lines, AMD's business is actually split into 4 segments: client for PCs and laptops, gaming for consoles and GPUs, data centers for servers and AI, and embedded specialized chips for industries like automotive and smart devices. However, in its financial report, AMD combines client and gaming into a single segment because they have similar business characteristics. So officially, the company reports 3 main segments: data center, client and gaming, and embedded. This is not financial advice. No buy, sell, or hold recommendations. Always do your own due diligence. In first quarter 2025, AMD posted solid revenue growth, driven by strong performance in data center and client and gaming segments. Gross margin also improved, thanks to a bigger contribution from data center chips and the lighter Ryzen processors. Operating income jumped significantly year-over-year, although there was a slight dip compared to the previous quarter. On the balance sheet, cash and short-term investments increased, while total debt also rose due to the acquisition of ZT Systems. Inventory went up, showing AMD is preparing to meet strong demand, but accounts receivable edged down slightly. AMD also continued to strengthen its financial position with an aggressive stock buyback. Overall, the report shows a positive trend, even though there are a few short-term dynamics worth keeping an eye on. The data center segment was the main growth engine this quarter, with strong gains driven by sales of EPYC server chips and Instinct AI GPUs. Operating margin ticked up slightly, reflecting better efficiency as revenue scaled. AMD is pushing hard to expand partnership, teaming up with Oracle, Core42, and other big names to solidify its position in AI and cloud markets. They also keep updating their ROCm software to stay ready for AI inferencing and training. Interestingly, the next-gen Instinct GPU project is on track to enter mass production by mid-2025. Beyond cloud and AI, AMD is also expanding into automotive through collaboration with Siemens and new software-based vehicle solutions. The client and gaming segment also saw decent growth, mainly thanks to a surge in demand for the new Ryzen Zen 5 processors. Operating profit climbed nicely, driven by high revenue and a richer product mix. In gaming, while there was a slight revenue dip, the launch of the Radeon 9070 graphics card was well received for its stronger performance. AMD also rolled out FSR4, a new technology that enhances gaming smoothness with higher frame rates. On the laptop side, many brands have started using the latest Ryzen AI processor designed for gaming and the thin notebooks. The launch of the Ryzen 9950X3D further strengthened AMD's position in the high-end desktop market. The embedded segment looked a bit stagnant this quarter, with both revenue and profit down slightly year-over-year. The decline was mainly due to mixed demand across industrial sectors. Still, AMD kept busy with new product launches, including the EPYC embedded 905 processors and Spartan Ultra-Scaled Class FPGAs, which are now shipping. AWS has also started using AMD's FPGAs in its cloud services for data acceleration and heavy compute tasks. In addition, AMD released VT's new software supporting the latest AI models and strengthened its collaboration with Cisco for next-gen firewalls. Even though growth here isn't aggressive yet, AMD remains consistent in building a solid foundation for the long term. AMD recently completed its acquisition of ZT Systems at the end of March 2025 to strengthen its position in the AI data center market. With this merger, AMD now offers a more complete AI solution covering CPUs, GPUs, networking, open source or OCM software, and rack-ready systems. This acquisition is critical because the AI data center market is growing fast, and AMD needs stronger system-level capabilities, not just chip sales. ZT System Design Team has officially joined AMD's data center business unit to help develop new products. On another note, ZT System manufacturing facilities in the US are attracting interest from potential buyers, which could add new strategic options going forward. Bottom line, AMD is getting serious about becoming a major player in AI data centers, not just through chips, but by delivering full systems that customers can deploy right away. Now let's go into their value calculations for AMD. I'm using a DCF discounted cash flow method based on an optimistic scenario with an estimated annual free cash flow of around $2.9 billion and 25% growth per year for the next 5 years, driven by strong momentum in AI and data center demand. For the WACC, I use 9% because that's a typical range used by analysts for AMD, reflecting its profile as a well-established tech company that's still aggressively expanding in semiconductors. I set the terminal growth at 2.5%, in line with long-term industry expectation for the chip sector. The result? The fair value lands at around $65 per share. Even though this number is much higher than in a conservative scenario, it's still below the current market price of around $102. The market assigns a higher value because of strong optimism about future AI growth and expectation that AMD can close the gap with NVIDIA in the AI GPU business. What do you think? Is AMD worth buying at this price? Or is it already too premium? Share your thoughts in the comments. On the narrative, ignore the noise. If you found this breakdown useful, hit like, subscribe, and let me know in the comments. I'll see you in the next one.